Hi traders, you're welcome to my channel. I am OT Josh. And now I'm taking a call option trade. Why? We are in a consolidation area whereby we have green, red, green, red, green. So yeah, we are expecting it to be a red candle, but yet I'm taking a call option. Why? Because of market condition. This is how market conditions affect the price action. In a consolidation state, it is it makes sense that the market goes green, red, green, red, green, red. But instead of red, I'm taking a call option because the market condition now permits me to take a call option. And I'm going to tell you what market condition is permitting that. This is where we talk about what the this is why I use the EMA and the Bollinger Bands. Now, if you look closely here, uh, if you look closely, excuse me, okay, look closely. So I explain this. Now, we have an uptrend. Why? We have higher highs and lows. You see, higher highs. This is it. This is the shape of an uptrend, right? Now, for we to see this as an uptrend that is supported by the entire market, not just me and you alone, we want to make sure that everyone in this pair, trading this pair right now, believes that it is an uptrend because it is only the belief of traders that moves price. When traders believe in one thing, price move in one direction. And how do we know that belief? We can only see the chart when there is no EMA, when there is no Bollinger Band. But we don't know where this pressure is coming from, even if the chart suggests what we've known in the past. The past cannot the past price action cannot always tell us what is happening next, right? So there is something we call force, or I used to call it the line of force, the place where the most pressure is. And this is why the EMA and the Bollinger Band is important, because when the price goes out of the Bollinger Band, it tends to fall back in. Maybe not in a trend, but it might leave a wick. You see price trying to go out of the band, is trying to fall back in. You see it goes out, it tries to fall back in on the different occasions. Now, what this means is that there is an extent at which price goes normally and then it retraces. It goes to that extent and then it retraces. It goes again and then it retraces. Now, it retraces does not mean that it is reversing, it is only retracing. Take note. And it is retracing so that it can continue its original direction. Now, where is that direction? Because we have seen that the EMAs, the Bollinger Band, sorry, we've seen that the Bollinger Band has given us a sort of boundaries as to which price can move and retrace and then move and retrace. But how can we confirm this direction? And this is why the EMAs are important. For instance, we were in a downtrend. If you look at this now, we have the 200, the 100, the 50, and the 20 EMA. When they are aligned in this way, it means the market is in a downtrend. Now, when they are aligned in this way and they are facing downward like this, is in a downtrend, but they are aligned in this way. Look closely at this part. The market is facing the EMAs are straight. What does that mean? A ranging market. Now, if it's in a ranging market and from a downtrend to a ranging, it will now lead to an uptrend. Look at what is happening right at the time when I took this trade. You can see what I call the golden cross between a slower EMA and a faster EMA. Now, you see the faster EMA between, look at this line here. This is the 50 EMA. It is crossing the 100 EMA. 50 is faster than 100. It is crossing it. Look at the 20 EMA. It is crossing the 50 EMA. It is crossing the 100 EMA. And at this point, it is crossing the 200 EMA. Now, this has shown, we've seen boundary, we've seen boundary and we've seen direction. So now we can now say, okay, the market is going in this direction for the long term, but at this point it won't go. It needs to come to the boundaries. You understand? And at this point, we can now start focusing on what price action. The price, okay, you see, I did this trade and look at where it took the price to here, and it has come back down again to the because it reached the boundary, it has come back now down. Now, when it's coming back down, this is you're looking at the EMAs. If you look at this now, a golden cross is about to happen again between who the 50 EMA, sorry, the 30 50 EMA and the 200 EMA. Once this crosses, it shows strength in the buyers. The market will continue to go up. But I doubt because the crossing of these EMAs, because they have higher EMAs, it may not go up as fast as when the 20 EMA is crossing. So what at this point, what's going to happen? We can see now that the Bollinger Band is going, you saw it moved just now, it's going flat, which is a sign of reversal. Now, when it's a sign of reversal, this is where price action now becomes important. Why? Because Bollinger Band has shown us a reversal place area there. We can now say, yeah, is a resistance area. And then another place we can look is the middle Bollinger Band, because when price came here the last time, you saw how it's reacted here. This is the price action around key levels, because the 200, all of these levels are key levels. This is like a fake breakout. You can see this is like a retracement in form of a fake breakout of the one deviation upper Bollinger Band, because after this three candlestick we are expecting a red candle, but you see it's a fake breakout of this one deviation. So price continues and everything go on. Now you see this price is going up, you can see golden cross. Now there is a price action now that can back up what we are doing. The EMA, look at this EMA is opening. I think there is, okay, you see it will go up. Why? Because even at this, there is a round number here which the price now has reacted to. At this point, everything now aligns. Here is it. Yes, 450. Not a very strong round. Yes, this is it. Not a very strong round number, but then it's going to work with it. And why do we know it's going to work? Because even at the running of this candlestick, the Bollinger Band now is showing you that okay, the road is clear. Look, the road is clear for you to move. Why? Because the Bollinger Band, only from here to here, has taken the data of this movement and it has plotted it to show us that the road is clear. So if you had done your trade using margin of safety, you see this candles. If you have done your trade, it closed here, placed it below the key level. This is why the entry point is very important. Below the key level, then you will know that you will win this trade. You don't just go and place it anyhow you like. Now, if this road is clear to go, why is it that this candlestick closed as what? A doji. Maybe on an underlying market condition is happening. And why is that happening? I will tell you again, still the EMA. But in this video, I'm going to stop here. It is still the EMA which I am seeing, most especially the 200 EMA. This flat EMA is showing that the major trend, no matter what you want, the minor trend can be up. This flat EMA is showing that the major trend is still down, so there might be some resistance, but this will be a story for another day. So until next time, please do wait to like, share, and subscribe. If you want, you can get the ebook. If you want the course, you can contact me at the if you want the course, you can contact me with the description, with the WhatsApp address and the WhatsApp link in the description of this video. And also for those of you who are on the mentorship, please contact me and let's continue. So that will be all for now. Take care and bye bye.